Hello traders, this is Rich Dare from tradesight. I want to take a look at the Japanese yen in the daily time frame and take a look at how the technicals are currently playing out. There's been some very good strength in the dollar versus the yen the last couple of sessions. I just wanted to take a few moments here and take a look at what's in the works here and what to expect in the days going forward here. What I want to do is I just want to strip down this chart for a moment here, back it out to just a naked chart, and take a look at the current design. Here's a look again at the same chart. This time it's backed out just a little bit as far as the data range goes, and it's been stripped of all the technicals that we use. What I wanted to take a look at was this top that formed here in the left part of the chart, and proceeded to have these couple of downward impulses before finding this low here, and then retesting and then pivoting higher here. Now, there's a couple key things that happened on the way down here. I want to talk about how we apply our seeker tool to identify where the key inflection points may actually be. So what I'm going to do now is I'm just going to take this chart, I'm just going to add the tradesight seeker tool on top of it, and we'll talk about what that reveals. Okay, now here's a look at the chart. This one's pulled back a little bit further in time. Here is the what was the left-hand portion of the chart, the termination of this little advance to the upside here. Then we had this area of unorganized trading before we start to roll to the downside here and actually pick up some momentum and start to organize the chart and get some true construction. During this time frame, we started to count down in the seeker buy setup phase. That is the 1, the 2, with these green numbers here, 1 through 9. After this 1 through 9 had completed, that's the minimum for the setup phase to complete. Upon completion of that, we start drawing what we call the static trend line, which is this green line up here. That's measured off of the highest high that's in the range of numbered bars. So this high up here is the highest high of all the bars that are numbered 1 through 9. So we're going to project that forward. And this is a level that usually becomes very important as you go through time, and it comes back into play. Oftentimes it's either a magnet or acts as kind of a price repellent, both of which are very important to understand. Now I've just slid the chart back over to the right again to show the current data. Again, this is that same 1 through 9 setup that we were looking at. And upon completion of that 9, you see we can begin to start looking for construction to count down for the ultimate exhaustion using the seeker countdown phase. So we get to 4 down here, and then we start this lateral consolidation, which is fine. It doesn't terminate the process of looking for the exhaustion point. It merely just puts it on pause until it can find satisfy the 2-bar look back and record another number. So we picked up here once we started declining again. Here's 5 and 6, and then there's a couple of loose days here where we don't really have anything too much happening. Then the downtrend continues until we get to this low bar right here, which is our candle 13, just under that cursor. So at this point, now we're on guard for a reversal back to the upside. This is the moment in time when traders who've been working on the short side should start to look to the long side. Now, obviously, with Forex, most traders really don't trade in the daily time frame. They're trading much smaller time frames. But it's always important to leverage the bigger time frames to your advantage and to make sure that you are looking on the right side of trade. So we had this pivot and this break back above the 10 EMA. We had this first impulse to the upside, which you should have been on guard for after receiving this 13 exhaustion here. Since then, we pulled back and retested the low, but never undercut it. It didn't even produce a new low close, as you can see here. Then we started to wind back up to the upside. So there was some fairly disorganized trading, but we did start to get the 1 through 9 count again. Started counting up till we got to 9. Now the thing that's really interesting here is this 9 to the upside was coincident exactly with our 9 to the downside before. This static trend line, our high watermark here, is exactly the point where this chart starts to run into trouble and starts to actually put in this expanding pattern. Here's a look at the chart with that expanding pattern drawn out on it. These can be very, very difficult because they tend to broaden, as you can see, as you go through time. But the important part to remember here is that even though we've reached the 1 through 9 to the upside here, we still haven't gotten to our exhaustion point yet for the complementary seeker sell signal. Actually, the candle that we're working on today is only candle 6 to the upside of the potential 13. So there's definitely still some more time for this chart to do its work and to work its way higher. So even if we continue to back and fill to the downside in this pattern, should continue to look for long setups here, and for an ultimate breakout to even higher prices still. Now I just want to I'll change the chart one more time. What I'm going to do on this one is going to add the Murray math levels, and when I do that, it's going to show us exactly where we are in time right now. Now here we are again with the same chart. This time we have the Murray math levels overlaid. This is something that we use all the time at tradesight, and you can see that we've pivoted up to the upside here. That expanding pattern, I've taken it off just to keep the chart uncluttered. But the level that we've traded today and gotten up to is that 8-ace level, 81.25. In the end, that's going to be a really key area. The 8-ace are very, very strong levels, and that's the first level where once you get above that, the chart becomes overbought. So while we're in this area, we're going to expect this area to kind of be a bit of a head knocker here, but pullbacks, to 7-ace or 6-ace should be looked at for a pivot back to the upside again. So if we do start to pull back here again, okay, continue to look on the long side for long opportunities until we get that seeker exhaustion, which we are right now only 6 days up. So those are the current technicals for the yen. If you have any questions, feel free to drop into the tradesight lab. You can talk real time with the analyst there. You can take a free trial. Just jump onto the website. We'll be happy to talk about either the seeker or the Murray math levels. Again, this is Rich Derrick from Tradesight. Good trading.